Hello and welcome to Market Today. I'm Siddharth Zarabi and you're watching Business Today Television. This Thursday afternoon, the markets holding up today, the Nifty up a bit, and I'm joined today on the show by one of the best market watchers in India, Sudip Bandyopadhyay, the Group Chairman of Inditrade Capital. Welcome Sudip to the show. I'm also joined by my colleague Tanya Aneja. And Tanya, coming to you first before I head to Sudip, what's the market been like today? Give us a quick summary and what's been buzzing.
Absolutely. So basically, the domestic indices are trading on a higher note today, extending their gains for the third straight session on the back of positive global cues. So, minutes of the US Federal Reserve's November policy meeting hinted at a possible moderation in the pace of interest rate hikes. So, clearly, bulls are in action today on the back of this positive global news. And also, now coming to the buzzing stocks. So, basically, PSU bank stocks are on a roll and continue to rally. So the recent stock performance of all the PSU banks has been rather unprecedented. And on a YTD basis, if you see, Nifty PSU Bank Index has zoomed over 60%. So Bank of India, UCO Bank, Bank of Maharashtra, IDBI Bank, they were all up in the trade today. Then coming to Tata Consumer Products, so shares of Tata Consumer were also up to the tune of 3% in the trade today. Now, the Tata Group firm is all set to buy Bisleri International for up to 7,000 crore rupees. And Ramesh Chauhan, who is the chairman of Bisleri, said that the deal is currently in the negotiation stage. Then, of course,
Right.
Yes. Then, of course, Hindustan Motors, the shares were up over 10%. They were up over 10% yesterday as well. After the automaker's announcement to extend its EV domain. Then
Right.
shares of yeah. Then
Tanya,
shares of
hold that thought there, because there are a number of stocks like you pointed out, and the big PSU banking turnaround that you alluded to. Sudip, coming to you now, the big macro theme that's playing out in some ways is the turnaround of the PSU banking space as we see it. Do you agree with that view? And can we go to the extent of saying that the era of non-performing assets is now changed to now performing assets?
Thank you, Siddharth, for having me here. I would say that definitely the entire BFSI sector is on a tear. And we have seen the quarterly numbers, whether it's Q1 or Q2. Private sector banks have come up with stellar set of numbers, most of them, I would say. PSU banks also have done very well. Of course, there is a credit demand pickup which has happened. Of course, the asset quality has improved significantly for all BFSI entities, including PSU banks. So yes, there's a fundamental change in the business paradigm of the PSU banks. Credit demand has shot up. Asset quality has improved, and also remember that whatever written off assets, they have started getting residual recoveries from written off assets as well through either the court process or the resolution process. So all this definitely augur well for the PSU banks. On top of all this, the fact remains that PSU banks were grossly undervalued, compared to their private sector peers. So there's some amount of catch up was bound to happen at some point of time. I think it's a constellation of favorable factors which is working in for the PSU banks at this stage. I won't be surprised even if they keep moving up like this for some more time and the valuation catch up happens. Even now, some of the PSU banks like PNB have a long way to go. Bank of Baroda has moved up, Can Bank has moved up, some of the other banks have moved up. So if you compare their valuation with a PNB's valuation, I think still it's available relatively cheap. So some amount of recovery and some amount of upward movement of price from here on also is expected for the entire PSU banking pack.
That's a very good point that is being explained by Sudip Bandyopadhyay viewers. The outlook on the PSU banking pack is significant, and if I may just add that in the run-up to the next union budget, which is effectively just 2 months or thereabouts away, we'll need to keep watching this space. Sudip, I want to talk about this space, BFSI space that you spoke about, something that I must tell our viewers, you know, for over 3 decades very, very well and very, very closely, having spent some time in that space directly as well. So one of the things that has been spoken about is the potential demerger of Jio Financial Services from RIL, and a valuation number that's been spoken about 1 lakh crore, and assuming that it translates into a 6.1% holding, Jio Financial Services or JFS is supposed to be the new kid, the new behemoth in a way that will be born from the Mukesh Ambani empire, the RIL stable. Do you have a view on Jio Financial Services and its potential to disrupt the space?
Well, Siddharth, I think, if you look at the history of Reliance and the way Mr. Mukesh Ambani has gone about building his businesses, I think it will become a formidable competitor in the areas they compete. We understand that they are already working on life insurance and general insurance business. They also, obviously, the holding company is going to become an NBFC, so they have lending plans. And on top of their existing multiple platforms, I think they have a huge opportunity staring at them for the entire Jio Financial Services. They can give loans, they can sell insurance, and they can do a whole lot of other things through the customer acquisition machinery they have in multiple businesses. They have the retail stores which can be used for customer acquisition. They have the entire this mobile telephony business where they have a huge captive customer base, and they are adding customers also, on month, significant numbers. And some of these customers can definitely be the customers of the financial services business. Synergistic acquisition strategies, synergistic business expansion strategies for JFS can definitely be worked out. So I have no doubt that they will become formidable competitors. To exactly comment on valuation, to exactly comment on where they will sit in the the league tables as far as financial services companies are concerned, it is a little difficult at this stage, Siddharth. But yes, they will be a formidable competitor. And I must tell you one more thing here, that it doesn't mean that the existing players need to really get worried, because Indian financial services space, the way we look at it, is still growing very rapidly. We are still scratching the surface. If you look at insurance, there's gross under penetration. If you look
Right.
at lending side, the opportunity is huge. So I think they should do a good work.
That's a good point, and before I continue with that, I'm also going to go back to Tanya in a bit, not just now, but in a bit, to tell us what really drove the Sensex up right now, almost 685 points, 20 minutes to close today. The Nifty up well over 200 points. We'll get some more flavor from Tanya Aneja on the stocks that led the rise. But coming back to you, Sudip, I want to take that theme forward. Yesterday, we saw Paytm react in trade. Now, I'm not directly linking it to the commentary and discussion around Jio Financial Services, but you yourself know and have hands-on experience of this space. Isn't there a significant execution risk and also a regulatory risk? Unlike telecom, which is also regulated, financial services, banking, and the whole piece is extremely highly regulated in comparison.
Siddharth, couple of things. Yes, it is regulated, but being in a regulated space is good. Regulations, I would say, to an extent, have stabilized. When a new sector starts, the regulations are a little fluid and things keep changing rapidly. That creates significant problems. If you look at the insurance space, I think the post privatization, the industry has spent more than 2 decades, and things have stabilized to a great extent. We have large players who are generating significant surpluses. So insurance is one space which I will say is pretty much settled, and in Reliance, Jio Financial Services is definitely getting into that. Lending is another space which, yeah, there is regulation, there are challenges, but there are significant opportunities. We know, the banks and some of the leading financial services players have actually created significant wealth for their shareholders through the lending businesses. So the opportunity is huge. As far as Paytm is concerned, I think the Paytm's problems are far bigger than Jio Financial Services. They still don't have a profitable business model. They still don't have a stable business model. So I think their problems are of a different magnitude altogether. Jio Financial Services probably will start as a profitable entity straight away. I mean, I don't see any problem in that as far as the lending piece is concerned. Yeah, insurance may take a bit a while before it starts turning profits, but that's par for the course.
Okay. Sudip, please stay with us. I just want to go back very briefly to Tanya for continuing that part about what really drove the Sensex up and some of the key stocks. Adani Enterprises, Adani Ports, the whole Adani pack, Tanya, also continuing to be on an uptick this 24 hours after news of another round of fundraising, Tanya.
Absolutely, and you were talking about the Sensex rising almost over 600 points. So basically, we caught up with some experts, and they say that the FOMC minutes indicate slowing of the rate hikes going forward, and that is what is actually working for Indian markets today. And also, the 10-year yield fell to 3.69%, and the dollar index also slipped to 106. So that is also working really well for the bulls today. So as long as this trend continues, bears will be on the back foot. And coming to the buzzing stocks as well. So you were talking about the new age internet companies, and all eyes actually are on them only. So shares of delivery were trading in the green today. That is because Jeffries has maintained buy rating on the stock. Now they have maintained a buy rating with a target price of 700 rupees, and it also expects improvement in volumes, revenue, and service margins going forward. And on the flip side, we have Paytm. The shares were trading lower for the fourth straight session today. Now remember, ever since the lock-in period ended, investors have been diluting their stake in companies like Nykaa and Paytm. And coming to other buzzing stocks as well, so HDFC Life, Apollo Hospitals, BPCS, these were among the top gainers. And on the flip side, we have Coal India, Kotak Mahindra Bank, that were among the top losers.
All right, Tanya, thanks very much for that quick wrap of the market action. Sudip, I'm going to come back to you, but as I do that, I also want to introduce my colleague Krishna Gopalan, who is the executive editor at BT Magazine, India's oldest and best business magazine, which gets you very comprehensive, very in-depth coverage of all stories that are significant. And while Krishna joins us, Sudip, I'm coming back to you. Here on, and we heard Tanya also talk about the different view that the FOMC may take and its impact. What is your view as far as the overall market direction is concerned as we head into December and a period where much of the Western world practically just works for half a month?
Well, Siddharth, you're absolutely right about the Western world slowing down, around mid-December. That's bound to happen this year as well. But the reality, which is for the Indian markets, is that we are on a very positive position. Couple of things I would like to mention. As we have read the FOMC minutes which came out, FOMC very clearly is on a path to decelerating the interest rate hikes. And this deceleration will eventually, I don't know whether it will be happening in March or after that, they will stop hiking at all. And with that, and actually the messaging is very important more than the actual action. So obviously the inflation outlook is sobering in US, and with that sobering, the need for hiking interest rate also comes down. Now this lets the FIIs and other institutional investors become again positive on emerging markets like India. The risk-on mood, as they keep saying, comes back to an extent. And there is a stability as far as interest rates are concerned in US, which helps them decide their allocation. The second most important point, Siddharth, I'll mention and take a minute, is that a lot of emerging market funds had raised significant amount of money in the last 5-7 years. And 80% of that money was deployed in China. With what has happened in China over the last 1.5 years, I think the emerging market funds are scared. They're moving money out of China. Now, the emerging market constituted of Brazil, Russia, India, and China. We know what's happening in Russia. Brazil has elected a left-wing president. So as far as the emerging market fund kitty is concerned, it is now definitely a significant part of that now will find its home in India. And that money is going to flow into Indian capital markets over the next 6 to 12 months. And that does augur very well for Indian markets.
Well, that's a good point, Sudip. And if I were to use an old Bollywood song to talk about "Jaye to jaye kahan," पैसा सारा इंडिया ही आना है. Please stay with us because Krishna Gopalan is with us. Krishna, an 82-year-old serial entrepreneur in some ways, now cashing out on a 4 lakh rupees investment made before you and I were born for sure, in 1969, acquiring a brand, iconic brand like Bisleri. It wasn't that iconic then, and now cashing out for 7,000 crore. The deal is still in the works. We haven't heard formally from both partners, but Mr. Ramesh Chauhan, the chairman, has spoken to both you and me. He's not come on camera, at least till now. Tell us, what is this deal and why is it significant?
Thank you, Siddharth. I think we just need to understand what Tata Consumer Products is all about. This is a company which is the new age FMCG company. Let's go back just in the past where the salt business from Tata Chemicals was carved out and that was moved to Tata Consumer. Tata Consumer actually was called Tata Tea earlier. That made way for Tata Global Beverages before the new look Tata Consumer Products. They already have an existing range of liquid beverages. Himalaya Mineral Water is one of them. They also have a Copper Plus Mineral Water. Bisleri is the most interesting acquisition because one must understand that in a market which is as fragmented as ours, you have at least 1,000 mineral water brands in India. And we use mineral water and packaged water in pretty much the same breath, which is not necessarily correct. But that said,
I want to interrupt you. Allow me to interrupt you, Krishna. Then why is Tata Consumer getting into such a low margin business? Is it to expand the portfolio or just add one more iconic brand?
Two things, Seth. One, it gives them greater access at the retail outlets because Bisleri will have at least a 12 to 14% market share. It's literally a Kashmir to Kanyakumari kind of a brand. Whereas the existing portfolio for Tata Consumer is still premium led. So they need something in the sub-premium category. They might be willing to sacrifice margins, but the uptake they have in terms of access to retail outlets and then the ability to push future products is very high. So there's a tremendous attraction and logic as far as buying of Bisleri is concerned to that extent.
So Bisleri becomes the flagship mineral water brand of this part of the Tata portfolio.
Most certainly, yes. But there is a bit of an interesting challenge here. Mineral water brands in India do not travel. And when I say that, it doesn't make economic sense for them to do more than 250, 300 kilometers because it eats into profit margins, which is why we have thousands of brands in India.
Right.
But the interesting thing about this is it's high in volume, low on margins. So how the Tatas manage to get that kind of mindset to the existing product portfolio where it's high margin will be most interesting to watch.
One more quick point, and this is something that you yourself have written about, and I would encourage users to head to www.businesstoday.in to read this story. It's off the listed space, but still do read it. My final question, Krishna, what happens to the other 3-4 brands, Spicy, Limonata, Pina Colada and Fonzo? I have never had these carbonated beverages, and I think many people and our viewers would also have a negative view on carbonated beverages. What happens? Are they part of the deal?
So that they will be a part of the deal, but the fact that you haven't tasted it itself is an indication of how badly these brands are performing in the market. Okay. They've been around for at least 6 or 7 years. Carbonated beverages on its own comes with a serious health hazard. And I think for Chauhan, it was a return to the business after having sold out Thumbs Up, Gold Spot, Limca, Marza and the entire lot to Coca-Cola. He believed there's a market in carbonated beverages, but the fact is, much as he'd like to believe it, the flagship of the company, and I would easily guess 90% of his top line will come just from Bisleri and nowhere else.
Absolutely. So, Thanda pani in a country that is in the tropics. Krishna, as always, wonderful talking to you. Thank you very much. Sudip, I'm coming to you. It's a 4 lakh to 7,000 crore story. Now, I don't know how many of our viewers must be saying, wow, is there any other story like that? Can I put up 4 lakh rupees and then hope for not 7,000 crore but at least 4 crore? From a listed equity space, is there something that you would want to talk about to our viewers at this point of time?
Well, I think everybody will love that kind of thing. And Ramesh Chauhan has iconic brands throughout his life and career. It's very, 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 I think, enriching experience, learning and understanding what he has done. But coming back to your specific query, which I probably can address, is that where can one invest in today's market for handsome returns? I would say that there are still a lot of stocks which are yes, they have moved up. Yes, they are not cheap. But if you look at a maybe 2-3 year time horizon, they will end up giving you handsome returns, and I'm pretty confident about it. So let's say a stock like an HDFC Bank. Now, it was the leading BFSI company. It was given the kind of valuation also by market, such kind of a valuation by the market. But there was significant correction post announcement of merger and multiple things. And now it's trying to catch up, but still it's lagging an ICICI or some of the other banks. And we believe that at some point of time this valuation will catch up. The bank itself is performing very well. They have a fantastic reach and the fantastic asset quality. So with that, I think HDFC Bank can definitely bought. I'm not sure whether you can put 4,000 and get 4 crore or something like that, but it doesn't matter. You invest. Every investment may not be a lottery, but it will be definitely a good investment. Even in BFSI, I will talk about SBI on the PSU banking side. It's moved up quite a bit. It's hovering around 600. But even now, I think the potential of the bank is still not being valued appropriately by the market. I think it's still got significant amount of runway, and investors having a slightly longer horizon can definitely invest. Now move away from BFSI. Let's look at IT. Now the IT pack, everybody has their own theory about what's going to happen, what's happened, and things like that. But I'm not getting into that debate. I'm saying, okay, IT got correction happened, and post correction, there some of these stocks, Infosys has moved up, but most of the other IT stocks are still available at a valuation which is significantly lower than where they were some time back. And the need for IT services or the demand for the services of Indian IT companies haven't diminished. They're not going to diminish in a hurry. Yes, there is a problem in Europe, and there is probably still a problem in US. But we have seen the types of problem Indian IT companies get more and more business, and I'm pretty confident that that same thing is going to get repeated over the next couple of years. Leave aside the last quarter. Before that, 5, 6, 7 quarters, if you look at the IT companies' results, the body language of the management about the future business, they were very, very confident. They were doing very well. And I think that trend will come back sooner than later. So picking up some of the good IT companies, let's say TCS, Wipro, HCL Tech, at current level, and you keep a couple of years time horizon in mind, you'll make fantastic returns. We can keep on talking about companies like this.
I had one quick interjection. There's been a trend of cost cutting in some ways in the FANG companies and other IT companies. Some bit of it has happened in the non-listed space in India. My question to you is, given that the IT companies had bulked up headcounts in the post-COVID boom that we saw, do you see some pressure on that front, and would it make sense for managements to look at controlling costs on that front?
Well, two things. I'll give it a different answer and then come back to your specific question. I think Indian IT companies will benefit with the cost-cutting effort being taken by the global companies. Okay. Because if you look at the rationale of outsourcing, started when they needed to reduce cost. So the entire rationale of Indian IT companies getting business was reduction of cost by the global majors. So that logic still is very much valid. Point number 2, and you are absolutely right, IT salaries and the tech hiring absolutely was madness, and there was definitely some amount of rationality need to be brought there. Some rationality has come back with a lot of these layoffs which are happening in the startup companies, because I think to an extent they were the culprits. They were paying any amount for getting talent, and that was not a very healthy practice. And I think what you're saying is right. Some amount of rationalization on the workforce, some amount of rationalization on the salaries, or at least a few years without any massive increments will happen, and that's absolutely fair. I think unrealistic things cannot continue beyond a point of time, and rationality has to step in, and that's what will happen.
Sudip, as we speak, I just want to add a bit of domestic news to the inflation discussion that we were having. A fall in global commodity prices is going to ease the inflation pressure. That's the monthly outlook from the finance ministry, and the chief economic advisor speaking earlier today has said that there is some downside risk to the economy on account of oil price, but we are seeing oil prices also cool off, but significantly internal drivers of demand look positive, and India's private capex, what was discussed earlier, but a reiteration again from the chief economic advisor of 6 lakh crore rupees in the current financial year. And a final point before I go back to Sudip, according to the CEA, he sees prospects for a pickup in capex in the medium term. And my colleague Karishma Asudani yesterday reported that there isn't the likelihood of a big bang budget, but what is pretty much certain that the budget for FY24 is going to double down on capital expenditure. The exact numbers will be known on February 1, but that is going to continue to drive the capex theme. And if we turn our eye back to the market, the Sensex nearing almost 62,390, up close to 880 plus points, the Nifty up 250 plus points. Sudip, I want to come back to you again on a question of what you basically were telling our viewers in a very simple way. If you're patient, if you're a long-term investor, there are more than enough multi-baggers, but you need a lot of patience and being smart about it. In the current environment, and the last few months have been a bit of yo-yo, what should the average investor do? And I'm asking you this because of the new addition of retail investors, and many of them have burned their hand, not from the listed equity space, but from crypto in the past few weeks.
Well, Siddharth, I think unfortunately, we have seen this getting played out many times. If the investors gets carried away and does transactions, makes investments without understanding, I think that's a recipe for disaster. I think with crypto, this pretty much the same thing happened. A lot of experts, including myself, have been warning the investors to be extremely cautious and probably stay away from crypto. The central bank, RBI, had repeatedly warned investors. Global central banks have warned investors. But I think they still got lured, and now they have burnt their fingers badly. We can sympathize with them, but beyond that, there's not much one can do. As far as capital market is concerned, there are established practices, rules. If you are a beginner, you probably don't understand the market. Maybe invest through a mutual fund. SIP has been doing phenomenally well. Investors have really created wealth by investing through SIP. People invest in market through insurance policies as well. And of course there are opportunities of doing PMS, seeking advice, watching some of the things like your shows, and taking decisions on investments. I think there are ways that people are making money. That's why people are coming to the market, and undoubtedly there has been significant wealth created by investors over the last couple of decades by strategically investing, smartly investing in market. Yes, there are corresponding stories of people burning their fingers. We have to sympathize with them, but the reality is they haven't done their homework.
Absolutely, and homework is very necessary, and never try and catch falling knives. Markets about to close a strong day on Dalal Street. IT, FMCG stocks shining. The Nifty up almost 1.35% at this point of time, close to 250. Most of the stocks that we have seen, there you have it on the screen, the Sensex up almost in the same range, and we've seen a tepid Dalal Street debut of a real estate company, but very clearly a robust day of trade today on Dalal Street as the markets close. A significant push coming from overseas cues, as my colleague Tanya had said earlier. and we also are getting some positive commentary from domestic sources, including, just as we speak, the member of the Monetary Policy Committee, Ashima Goyal, now being quoted as saying the repo rate is not that high, it is sufficient to let the economy grow, and she has said inflationary expectations continue to remain anchored, and she's been speaking at the State Bank of India conclave. The quick check on the rupee at this point of time, 81.63 to the US dollar versus 81.84. So at 3:30 p.m. the rupee at 81.63 on at 3:30 p.m. I'm going to thank Sudip Bandyopadhyay for his time with us today. Sudip, it's been wonderful talking to you, and I hope to get back on television with you, away from closing discussion, but about long-term investment mantras, some of which you just shared with us, and I hope viewers, you've benefited from what Mr. Bandyopadhyay had to say. With that, it's a wrap on this show. We'll be back tomorrow again. Do stay with us and continue to watch Market Today.